In these days of sliding stocks and surging volatility, our next guest finds comfort and opportunity in gold. He's Jay Taylor, the president of Taylor Hard Money Advisors and editor of miningstocks.com. Jay, hello.
Hello.
Where are we going as far as gold, at least on a short-term basis, considering the volatility courtesy of the Eurozone?
Yeah, you know, it's in terms of nominal prices of gold, I don't think it's all that important. What I really think is important, Michael, is what an ounce of gold will buy. And, you know, day to day, the gyrations in the market, you know, I think we're in a bull market for the ages in terms of gold. This is a secular bull market that will be greater than anything else I've seen in my lifetime. But what is really important is the real price of gold, and I like to measure that. You know, what you can trade an ounce of gold for. For example, in 2008, July of 2008, you could have purchased only 17% of the Rogers Raw Materials Fund with an ounce of gold. The Rogers Raw Materials Fund is comprised of a lot of energy, a lot of base metals, some food, and some clothing items like cotton and wool. It's meant to be an indication of the cost of staying alive, as per Jimmy Rogers, who created the fund. And an ounce of gold would have purchased only 17% of that right before Lehman Brothers in July of 2008. By March, 6-7 months later, it would have purchased 44% of that fund. It came down a little bit to about 30% when the good times returned with all the stimulus and the optimism. And then it crept up to 35%. And then when the Greek crisis first arose, it rose up to 44%. Came back again, and more recently it's around 46%. It got as high as 48.5% about a week ago or so. It's about 45%. But the point is that an ounce of gold is becoming much more precious relative to other commodities, relative to copper, relative to energy. And that's very important if you're into the mining stocks. It's very important. And this is the main reason why the gold shares, the major guys, the Barricks, the Goldcorps, the Agnico Eagles, the Newmonts, and those kind of companies are having earnings that are surging very, very dramatically from, you know, like a 3- or 4-fold increase through the end of this year from 2008.
But will an ounce of gold buy you a good night's sleep? You're saying that the U.S. economy is much worse off than the official data suggests.
Yeah, and believe me, I would much rather see gold go nowhere and have a robust economy when people are using their energies to produce things that are useful to other human beings. The problem is that we have something called malinvestment. The Austrian School of Economics adheres to this notion that if you pump too much money into an economy too fast, a lot of bad decisions will be made in terms of allocation of capital. And we certainly saw this with the dot-coms to a great extent. We certainly saw it in spades with the housing bubble and the bust that's followed. Bad decisions are made when you pump huge amounts of money into the system. The problem is that we have a fiat currency system. It's a liability system. It's not a gold-backed system. The gold itself has intrinsic value. We have paper money, which has no value. The only value and the confidence that arises from paper money is when everybody can pay their debts, or when most people can pay their debts. The problem that we're running into now is increasingly the world is unable to pay its debts. We've seen an exponential rise in debt, and that debt cannot be repaid, and we will not have robust economic growth. I fear we're going to have substantial declines in the economy, global economy, including Asia to an extent. And that is not good for the base metals and for the energy metals. You know, that's the bear case, and that's the case that I believe that we're facing right now.
And I guess this is also why you're not as bullish on silver bullion as you are on gold bullion.
Correct, because I believe that silver throughout history has been the second best monetary metal. It is silver definitely derives a lot of its value from its industrial use. Unlike gold, which derives almost no value from industrial use, it's almost exclusively held in vaults as a monetary asset. And so silver is to an extent, and it's sometimes referred to as poor man's gold, and I think silver will have a ride with gold to an extent. Now, if I'm wrong about the deflationary scenario, if I'm wrong about the credit scenario, if we hyperinflate, then all bets are off, and I'm not particularly bullish on gold and gold mining for sure if we have real serious problems with inflation. But my bet now is that given the enormous amount of debt that has to be worked off the books, that we're really facing more of a deflationary problem and possibly one that is very, very significant.
I know you like Allied, Nevada, Dynacore, Sandgold as well. Of all your children, Jay, which one do you love the most?
Oh, that's very difficult. How can you say you love one more than the other because they're so different? But I suppose if you want to choose the most unusual one, it would be Dynacore. They're the smallest cap company of those you named, but Dynacore is very unique in that it's growing its production, and I'm told expects to grow it up to 125,000 ounces or so in about 3 or 4 years. It's been creeping up to will produce 45,000 ounces this year. The thing I like about Dynacore is it's producing cash flow positive, and it keeps its numbers of shares down. It's really not issuing shares. It's growing organically. It will be producing from its own high-grade underground mine in the not-too-distant future. And then the real upside comes with the potential for a gold and copper skarn deposit that could be of world-class proportions. And so if it gets to that point, this company will probably bring in a major to help joint venture the project. But it's real organic growth. It's not a big company. It's a small market cap.
Right.
Some of the others will be appealing to the larger players, but this is one of all my children, as you say, probably the one I would love the most.
Jay, great having you with us. Thank you for your time.
Thank you.
Jay Taylor, president of Taylor
Thank you,
Hard Money Advisors and editor of MiningStocks.com.